Namaskar, and thanks for joining us here on our weekly program on the economy from an Indian point of view of the world. On the program, India's trade deficit declines in August despite the 50% US tariffs, a sign of resilience and foresight. Sri Lanka's economic indicators show financial systems are stable, says the country's central bank governor. India's purchases of Russian oil do not diminish in August. Energy security priorities remain. It's Hollywood versus Chinese AI. Studios sue over alleged theft of iconic characters and creative intellectual property. Now, before we move on, let's listen to the Finance Minister of India, Nirmala Sitharaman, urging the private sector to partner with government to upskill youth, creating more direct employment opportunities in the country. This was at the annual symposium of the Indian Foundation for Quality Management in New Delhi.
I hope there's no more hesitation for industry to invest further, to expand capacities, produce more in India. And what else is required by the government to do? Spell them out. The second, a point that I referred when I spoke, how to bridge the human resources insufficiencies. So I would want private sector participation together with government in readying youth to be fit for quick and direct employment. And the third one, which I've repeated several times, is the engagement with government should be ongoing. It should not be just before budget, come and say a list of things and disappear. Please keep it going on. We're all here to hear you, and we respond.
So let's turn to our top story now on India's trade deficit. Here's a snapshot of the trade deficit in August. It was at $26.49 billion, and in August of 2024, the deficit was at $35.64 billion, a year-on-year drop of about 25.7% compared to August of 2024. Let's put this into context. In the next slide, we can see that merchandise exports, in fact, rose by 6.7%. And that $35.1 billion is driven by electronics goods. That's up plus 25.9%, electronic goods. We can see that that's a pretty good sign. Then there is, what are we talking about in electronic goods? The manufacturing then is showing that it's sign of some robustness in manufacturing. In the engineering goods space as well, 4.9% up. Important because this is showing that India's brand value is strong. Gems and jewelry is India's traditional sector of exports, was up 15.6%. Drugs and pharmaceuticals, again, one of India's strong points, that is up about 6.9%. Now, this is interesting because there was fear that the Trump administration was going to tax the pharmaceutical sector of 200%, but actually that sector has not been taxed like that. In fact, some parts of the APIs and all that are actually exempt from taxation. So even chemicals, in fact, would fit into some of those categories, and we can see that it's up about 3.8%. Generic goods is what the US administration was going, generic drugs, I beg your pardon, is what the US administration was talking about, taxing at 200%. But now US tariffs, as we know, are up to about 50% imposed, and that started as of August 27. So what did exporters do? Our exporters were pretty good in the sense that they had front-loaded the shipments. They basically had the foresight to send those shipments earlier than the days that the taxes had started coming in or the tariffs had started coming in. So that has also impacted the exports for that month. Then there have been diversified markets, as we can see that there have been new markets, or rather the increase in the markets for Europe, Japan, Latin America and the like. So there's diversification taking place. Let's move on to our next slide. And we see imports too have fallen. That's helped in the trade deficit. Imports fell 10.1%, in fact, to $61.6 billion. Among them, gold imports were down 56.7%, and transport equipment was down about 26.5%. So huge areas of imports coming down, which have helped the Indian trade deficit to come down significantly. We can also see that chemicals too, that we have been importing, has also come down by about 5.2%. There is project goods and silver too have also seen sharp declines. So there have been some declines which have helped in the trade deficit. But if we look clearly at what is helping this, the trade deficit largely is because of services. India is strong in services, and services exports rose to about $34.06 billion in the month of August. And that services surplus has offset about 62%, 62.7% in fact, of the merchandise trade deficit. So the services has helped to bridge that gap in a sense, and has brought the trade deficit down to some extent. So what are the key factors that are playing around in the background? We can look at the key factors. The production-linked incentives, these have boosted manufacturing, as we can see. Then there is GST reforms. These have enhanced competitiveness, and then there's diversification efforts which have reduced dependency. So we can see that these sectors have helped the Indian economy to sort of remain strong and resilient, and our trade sector to remain resilient despite the US tariffs. So sports goods and toys is another export area that we didn't talk about much, but the Export Promotion Council has announced the winners of the Export Awards for Sports in 2024-25, and the Union Sports Minister, Mansukh Mandavia, he presented those awards to exporters who had excelled in global markets and boosted India's image as a trusted source of quality sports goods and toys. So the winners thanked the government for creating a strong manufacturing ecosystem in India. Let's listen to them.
At the moment, every foreign countries are concentrated on in India, and there is a potential scope to increase in the sports. And if they can give some relaxation in the sports, raw material, machinery for upgradation, technology upgradation, I think whatever share we are giving to India, it will be up.
It's a great time to be in India, actually. The government is very encouraging. Also, the whole world is looking at India as a sporting manufacturing hub. And exports of sport goods from India are increasing every year.
And Dr. Charan Singh, who's the Chief Executive of eGrow Foundation, eminent economist, is joining us. Dr. Charan Singh has an expertise in international trade and in monetary policy, just the subjects we're going to talk to him today about. Dr. Charan Singh, do you see the trade deficit coming down further as diversification takes place?
Absolutely, I do see that. The reason is very clear. I think after Operation Sindhu and even earlier, the government seems to be very clear because of the tariff war, the way it is being played out, that we will have to diversify our exports. And under the G20 presidency, Government of India had played a very key role in the global south. I think this is the time that the world is understanding. India is also now practicing it. We are diversifying our exports and expanding trade with Africa, Latin America, and Asian countries.
Right.
I think that's very important, and that has also shown up results. In the meantime, if you look at the products also, on the products, despite the tariff war and all that, of course you mentioned the front repeat that was done, look at the type of commodities which are showing us positive results. Diversification of products is also happening in a big way. Marine products have done very well. Meat, dairy and poultry have done very well. Mica, coal and other ores have done very well. Electronics have done very well. Drugs, gems and jewelry have done very well. Engineering goods have done very well. So on one hand, while we are expanding the market, expanding our markets, We are also diversifying our export goods.
Right.
We are also, in a way, you have noticed that the Prime Minister was speaking about the semiconductors. I think as we go into import substitution and Swadeshi, which is
Right.
the Prime Minister speaking from the ramparts of the Red Fort, I think our trade deficit is going to further shrink. To that
Indeed.
extent, I think it's a very positive thing because we are localizing critical inputs in pharma, solar modules, electronic components, and we are also looking into renewable energy equipment. These will help us replace imports. So there's
Okay.
going to be import substitution within the country.
Indeed.
All this will help us in reducing the deficit.
Indeed. So that import substitution is also an important aspect that I didn't speak about, but you mentioned. But do you know what more can the government do to help improve the exports?
I think diversification will have to take place further. The PLI scheme that you spoke is also a very positive scheme. I think that has to be done. I also feel that trade credit will play a role. The interest rates are coming down. So business environment ecosystem in the country is improving. Of course, as we speak, the interest rate in the USA has also come down. So there's going to be easing of interest. As we started this interaction, you played the FM's interview. I have also personally experienced that this government listens to the industry. Whenever we used to go and meet them, I was sometimes with SHM. They listen to the industry. Now, once they have realized that the industry government interaction, public private interaction is important, I think this effort is going to be continuing not just before the budget, but on a long-term continuous basis.
Okay.
The requirements of the industry, wherever there is a hiccup, I think is going to play a role. And the products which we mentioned, you also mentioned sports good, toys industry, and drugs and pharmaceuticals. These are going to play an important role in days to come. So in case there are any hiccups in these. Also, one more point that I want to mention is the trade diversification taking place in new destinations. I must share one thought here. Looking at the data, in countries which are also like America causing that tariff war, exports have gone up there too. But other places where we can look for better exports and therefore the government support would be required would be something like Germany, where we can improve our exports, and also in countries like further in China. I think we can do better in the FTA, which has been signed with the UK. We could do also with Arabs. So there is scope, and the government can help us in identifying. I also want to mention the last point. Under Operation Sindoor, when we went to various capitals, 33 of them, I think the scope of expanding trade relations with these countries also.
Indeed. Do stay with us, Professor Charan Singh. We are going to look at the Sri Lankan economy now in our next story, and we'll come back to you for your comments. Sri Lanka's economy has made significant strides towards stabilization. In fact, after the deep contraction between 2022 and 23, in fact, GDP rebounded by approximately 5% in 2024. That was driven by construction and tourism, which was revived. Now then, headline inflation is well in control, and the Sri Lankan rupee too has appreciated about 19.4% against the US dollar since that time, since the bad time that they had. And also external debt restructuring is nearly complete, and the usable foreign reserves have risen to cover about 3 months of imports. So the country's central bank governor seems to be pleased. Here's our report.
Sri Lanka is edging toward debt sustainability, says Central Bank Governor P. Nandalal Veerasinghe ahead of the September 23 policy meeting. In May, the bank cut its policy rate to 7.75%, a move Veerasinghe says was smoothly absorbed, keeping financial systems stable.
What it means is that if we are able to grow over 3%, and like what we see, 4-5% is not a challenge for Sri Lanka to grow in the future, next several, say 5-10 years, which means we should be able to stabilize and reach much more sustainable and comfortable level of this sustainability much faster than what we think.
Sri Lanka's current optimism contrasts sharply with the 2022-2023 crisis marked by debt default, inflation and shortages. Mass protests led to an IMF bailout and a historic fiscal adjustment of nearly 8% of GDP. The central bank shifted from emergency measures to easing rates and stabilizing inflation. Exports, remittances, and tourism have rebounded, boosting reserves. Debt restructuring and stronger revenue collection have helped surpass mid-year targets.
Going forward, so with the after debt restructuring, external reserves obligations are going to be on average 3.5 to 4 billion for next 10 years. If that is the reserves obligations, compared to the situation we had in the past, if we have say 4 billion reserves obligation, if we have 8 billion in our reserves, so it's quite comfortable level.
Recovery remains in sight and Sri Lanka is steadily rebuilding. It reminds one of Greece, a country that had 3 IMF bailouts of 289 billion euros between 2010 and 2018. It is now one of Europe's fastest growing economies with strong exports, low joblessness, and a regained investment grade status. Greece benefited from European integration. Sri Lanka has benefited from a stable neighbor like India. The Economic Brief, DD India.
Well, Dr. Charan Singh is still with us. Dr. Charan Singh, are there still challenges ahead for Sri Lanka? Should they be more cautious than they are optimistic?
Honestly speaking, Sri Lanka is a classic case of good success. They worked hard. They had a very difficult time in 2022. The GDP growth is booming, as you saw. They would have probably done better in 2025 had the budget been presented in time. The GDP growth being good. Inflation is a little higher, around 5%. I think they would like it to be a little lower. The national savings rate is bouncing back, and I think that's also very, very good. And if you look at their current account balance, that's also very good. I think in a country, by the way, the IMF had done their report in July, and they were also very happy after evaluating the performance of Sri Lankan economy. And there were certain things that had to be waived off, because certain things were not completed, and those were waived off. That clearly shows that IMF has confidence in the economy of Sri Lanka. Debt restructuring is important. The debt to GDP ratio is still high. And I think that needs to be focused upon. And I think the Sri Lankans are onto it. So therefore, there's nothing very much to worry about. The debt GDP is more than 100%. You know, according to Maastricht Treaty, it should be around 60. The global average is around 80. So I think that is one area where fiscal thing needs to be taken care. Some restructuring and structural reforms have to be taken care. Otherwise, I think the Sri Lankan economy has done very well.
And how, being close to India in proximity, has that helped Sri Lanka in its recovery?
I just mentioned this, when you must have seen in Europe also, you've seen in America also, countries go up together and then have trouble together. And if they stand together whenever there is a crisis, like a friend stands together, it's always helpful. In the region, we are the countries which are there. India is, of course, like the big brother in the region. And India, I think, played a very important role during this whole phase when Sri Lanka had a difficult time. They provided it with the support. About $4 billion were provided to Sri Lanka. I think that was a very positive thing. Because we are very close, the tourism industry plays a very important role.
Right.
And the amount of tourists which go from India to Sri Lanka is a very important. Culturally, please remember, we have very similar culture in our countries. So that provides lots of proximity to each other.
Indeed. Okay.
When the debt restructuring was taking place, India was part of the official credit committee in some instances of debt restructuring and played a very important role during that time also. I also feel bilateral projects, investment, strategic positioning is important in terms of infrastructure, sustainable energy, basic services. And I think we need to build on that relationship. And that's the direction in which I see things are happening.
Right.
As I mentioned that culturally we are quite close. There's softness of barriers. And in this time when global uncertainty is so high, the gravity model of trade and tourism helps with a neighbor which is nearby, prosperous, and interacting with each other.
We leave it there. Thank you very much, Professor Charan Singh. Thank you for helping us understand these two subjects in greater detail. Now, moving on to our next story. In fact, India's energy choices are once again in the global spotlight, even as Washington had raised tariffs and voiced concern. New Delhi's imports of Russian crude remain steady and even get stronger in the first half of September. What do the numbers reveal, and how is India balancing economic needs with diplomatic pressures? Let's look at this report.
India, the world's third largest oil consumer, depends on imports for nearly 88% of its crude needs. Since 2022, discounted Russian oil has helped New Delhi save billions of dollars in foreign exchange. Before 2022, Russia's share in India imports was less than 2%. Today, it accounts for more than a third of the basket, displacing traditional suppliers from West Asia. Fresh data reveals that India imported 1.73 million barrels per day of Russian crude between September 1 and 16. That's higher than 1.66 million barrels per day in August and 1.5 million barrels per day in July. Analysts say these deliveries correspond to contracts signed weeks earlier, indicating that India's buying patterns remain steady. Yet these purchases come amid a storm of criticism from Washington. In August, President Donald Trump slapped a 50% tariff on Indian goods, doubling existing duties, as what he called a penalty for New Delhi's oil deals with Moscow. White House advisor Peter Navarro went further, calling India's purchases a laundromat for the Kremlin, claiming that Indian refineries are indirectly fueling Russia's war in Ukraine. However, former US National Security Advisor John Bolton said that Trump's additional tariffs on India are self-inflicting wound on the US.
I don't think it's helpful. I don't think he understands that in this trade war generally that he's started, that the U.S. is losing a lot of belief in our reliability, our good faith, and so on, that we've tried very hard over a large number of years to build up. But I think it's a self-inflicted wound. I think it was unnecessary. If we want fewer tariffs, fewer non-tariff barriers between Indian and American trade.
India says its oil purchases reflect market needs and energy security and is aligned with the national interest. The government maintains it will buy from any source that is commercially viable and not under sanctions. Experts point to a trade-off: refiners save from discounted Russian crude while exporters face higher US tariffs. India continues to admirably balance affordable energy with trade pressures.
Commodities from Russia flow into even Europe. They flow into China, they flow into India, they flow into various parts of the world. It's not stopped anywhere. So I think that is what kind of confuses some of us on why the application of secondary tariffs selectively on India, being the only country when the rest of the world is pursuing a course which is not so radically different.
Looking ahead, the true impact of tariffs might be visible in late September and October, since oil contracts are signed 6 to 8 weeks in advance. For now, New Delhi appears determined to hold its ground, balancing its energy needs with diplomatic maneuvering. Tarun Badgaia's report for the Economic Brief, DD India.
Well, Hollywood is escalating its battle with artificial intelligence. For the first time, America's biggest studios are taking a Chinese AI company to court, accusing it of exploiting their most valuable creations. At stake are iconic characters, billions of dollars in investment, and the future of human creativity itself. We leave you with Diptanshu Kashyap's report explaining it all. Thanks for watching. Namaskar.
Renowned Hollywood studios Disney, Universal and Warner Brothers are taking legal aim at one of China's fastest growing AI firms. The studios have accused the Shanghai-based startup Minimax of willful and brazen copyright infringement, alleging its image and video generator Hailu AI was built by plundering Hollywood's most valuable characters. From Darth Vader and Wonder Woman to Spider-Man and the Minions, the complaint says Minimax has turned beloved icons into marketing tools for its so-called Hollywood studio in your pocket. The company said they support responsible AI innovation but stressed that the lawsuit reflects their commitment to holding accountable those who violate copyright laws wherever they may be based. This is the first lawsuit of its kind where major US entertainment companies have sued a Chinese AI company. Filed in California federal court, it names Minimax and its parent company, Shanghai Xiu Chichi Technology, as defendants. Hollywood says Minimax ignored repeated cease and desist warnings, continuing to promote copyrighted characters even after being told to stop. The case also follows a similar action in June against the US-based Midjourney. The studios are seeking damages that could reach hundreds of millions, with statutory penalties of up to $150,000 per infringed work. Founded in 2022, Minimax is already valued at $4 billion. It claims more than 157 million users worldwide and 50,000 corporate clients across 90 countries. The lawsuit also comes as Hollywood continues to wrestle with the fallout of the 2023 actors and writers strikes. Many performers and creators are still struggling to find work, warning that AI could threaten their livelihoods as tools replicate copyrighted characters with simple text prompts. While some studios are taking AI firms to court, others are experimenting with partnerships, signaling a film industry divided over how to manage the rise of artificial intelligence. Diptanshu Kashyap's report for the Economic Brief, DD India.